Welcome everybody. Thanks again for coming out tonight. It's going to be a great talk. We got San Antonio Bitcoin Club's very own Will Ramirez here. Will, you want to tell everyone a little bit about yourself?
Sure. Let's use this. My name is Will Ramirez. Okay. Will Ramirez. We're going to pretend this works. I work with Mining Syndicate. I think it's all right. Okay. Yeah. We offer mining ASIC sales and hosting services. A little closer. Is that better? Okay. Yeah, been with the company since its inception in October 2021. Headquartered in Dallas, Texas. I work remote, obviously. I'm in the sales department, so here to just talk a little bit about mining, what Mining Syndicate does and has to offer, and then just kind of answer some questions. I'll say from the beginning, I am not an expert myself. But I put a lot of time and effort into learning about mining. So it's a continuous effort to continue learning. And I think situations like this where we can bounce ideas off each other is always really cool to get new people to understand what mining is, what the benefits could be from it, why people mine, and stuff like that. So feel free to ask questions at any point. Again, I am not an expert, but I'm happy to expand what I've learned up until this point. So.
Yeah, if anybody has any questions, we got a third mic just so that everybody can hear what the question is. Just going to do it Socratic style, so if anything pops in your head, just raise your hand and we'll call on you to ask your question, shoot your shot. So the first question to start this off, well, I want to ask your Bitcoin story and how you got into all this, because everybody's got a different story. So.
Yeah, that's one of the cool things about Bitcoin is, I think I've said this before, is it kind of brings people together for different reasons. Like, the reason I got into Bitcoin is probably not the same reason you did. So for me, one of the cool things I guess I heard about Bitcoin way back when everybody should have bought it, and we probably didn't, or if we didn't hold it. So about 2018, I became really interested. 2019 is when I put some actual skin in the game and got into Bitcoin. 2019 or so is when I got really interested in mining. And so I went down that rabbit hole for a while and learned the ins and outs. Bought my own miners from suppliers in China, which was in itself a whole fun ordeal. And at that point, I really wanted to expand. I also really wanted to get into the industry. Working in Bitcoin was just a goal. I got orange pilled. And I come from a traditional finance background, and I just really wanted to work in sales or in mining, I should say. And I spent a better part of a year. I wasn't in any rush. I was looking to get in with a company or just work in Bitcoin somehow. And mining was the niche I really wanted to get into. So in 2021, Mining Syndicate was just coming off the ground. They were looking for some sales associates and kind of my background aside from the financial or traditional financial side is I have some sales experience. So it was really serendipitous. I reached out to the owner. Things worked out, and yeah, I've been with them for almost a year and a half now. So when I got into mining, it kind of narrows your focus, I guess, in Bitcoin. Like I said, everybody kind of gets here for different reasons, but that's kind of what I've put my focus into. So yeah, I guess that's how I got here now.
Well, Bitcoin's got a lot of vectors, man. I mean, mining's a big part of it. That's why we wanted to have you here tonight and speak on it, your knowledge. I know you say you're not an expert, but you definitely probably know more about mining than a lot of us in here. Like hodling has its place. You got builders; they have their own place. Developers. So yeah. So what does Mining Syndicate? What's the mission? Like, what are they there for? What purpose do they serve in this whole space?
So Mining Syndicate, and it's on the front page of our website. We're here to bring mining to the masses. We want to bring mining to the 99%. So just to give a little context to that, traditionally, if any one of us wanted to get into mining, call it 3 years ago, as soon as 2 to 3 years ago, the retail side really didn't have any options. You basically had to be a big fish, a whale, or institutional size type client to be Yeah, sorry. Yeah, this is better, yeah. So it was just a lot of roadblocks to be able to get in. It was a lot of capital expenditure, really expensive to get in. So it was really the select few that were able to mine. Companies like Riot and Marathon kind of just took over. And so a lot of plebs and a lot of retail type, wannabe miners really couldn't get to that point because there was no opportunities. And so, about 2018, 2019 is when you started seeing companies come out with hosting opportunities for retail size type clients. So what Mining Syndicate does is we have great resources with our suppliers, so we can sell you the miner. That's the easy part, right? We got great opportunities to get them here within a week or so direct from China. And so really competitive pricing, the whole 9 yards, that's easy. But if you want to mine at home, it does take a lot. So the machine itself is very loud, right? So like you plug this in at home, first of all, you need a 220 volt. It's what your washer and dryer uses, or one or the other. So it can't really plug into a normal outlet, right? One problem. Next, it's loud. It produces a lot of heat and a lot of wind. So you can't really plug it into your kitchen or your living room or your guest room without it sounding like you're close to a train that's passing by continuously. It's really loud. And so, myself included, when I got my first miners, I could do it at home, but I didn't want to. It is an endeavor to get it going. So, hosting companies, hosting providers really do serve an important niche because there's a lot of people who want to take part in mining, but there's several roadblocks, not even the cost or the ability to get somebody to sell them to you one at a time. But when you do get it, plugging it in at home is really tough, and it takes a lot. So what Mining Syndicate does is we have partnered facilities. These are data center type facilities that are, from the ground up constructed to be for mining hosting. So it's very intentional. It's very clean. It's very there's technicians on site, the whole 9 yards. So we host miners and are able to sell the miners to you. So you don't really ever. There's a lot of customers who think of it, and at some point you're really never going to touch your miner, which is kind of a weird thing to think about. You're spending a lot of thousands of dollars on a miner. You send it to a facility, you see your hash rate come online, and then you're earning Bitcoin, but you never really put your hands on the asset. So it's a weird thing, but it is something that we've been doing for, like I said, about a year and a half now. And so the mission and what we're going to get to, I guess, in a minute is split shares, which is a product that Mining Syndicate we created, and we're really proud of, and that's what everybody's going to be getting tonight. What it does is it allows you to mine without having to purchase the entire miner. It's pretty simple. It's a software that breaks down the miner into 100 equal shares. The software also deducts the power that is required the cost of the power that's required to run the miner. And then every day, shareholders get the profits. So it does it all. It's kind of a really set it and forget it type thing. And you can kind of dollar cost average into hash rate, which is a really cool thing. A lot of customers that buy miners, like for instance, if you bought a miner a year ago, you paid probably 70% more than they're charging or they're going for right now. So it's just market related. Obviously, everybody knows what the market's been for Bitcoin recently. But this gives you the opportunity to slowly average into hash rate. You buy 5 shares every paycheck, something like that. So a lot of people that I talk to use it as almost like a retirement type investment. Excuse me. So that's what everybody's getting tonight. This is a split share. So it's a 1% free for the life of the miner, and you'll get to see how the software works. You'll get to experience mining firsthand, and then from there, if you want, there's always shares available that can be purchased. So, Mining Syndicate is really just trying to give you the opportunity to have no reason to not try mining, essentially, if you're interested.
So you want to get into, I'm jumping the gun a little bit here. What mining is and what purpose does mining serve? Because I know it's a little complex. I had to read up on it myself. So if you want to break it down, and
I don't know that I can break it down better.
I'll bring it down. I'll bring it down to eye level from whatever he says for sure.
So, mining is essentially the backbone of Bitcoin being able to work, right? So miners are, excuse me, they're securing the network and getting paid rewards for doing so. Bitcoin is an open ledger. Every transaction is on a ledger, and miners make that happen. So the beauty of it is really difficult to kind of explain and understand, even for me. Like I said, I'm still learning about it, but yeah, I don't know. What do you think?
So basically, one of the easiest ways to put it, here's two examples. Imagine we're at a table and there's 100 people. We all got a dice, but it's a 1,000-sided dice. So the rules of the game are, okay, you have to roll a number under 10. Whoever wins, whoever gets that number under 10, you get 3 Bitcoin. So essentially what the miners are doing are, they're hashing, they're guessing these numbers, putting them into an equation that has to be below a certain number. And if that miner gets below that certain number, they win the block reward. They win 3 Bitcoin. So another way to put it is like, think about a receipt, right? You have all the items, you can audit a receipt. That's why they tell businesses to hold on to these receipts in case you need to be audited, hopefully not. But essentially what it is the miners basically build the receipt, and once they get this certain number that they're supposed to, everybody agrees that's the answer, and they put all the transactions in that block, on that receipt. And it's called the blockchain because they're blocks. So that block gets added to this chain of old transactions that are blocks. So what the miners do is, another example is, it's like they're putting a puzzle together. Once the miner puts the puzzle together, they say, okay, I finished this puzzle, and all the nodes come in, look at the puzzle, and that's what the nodes serve. The nodes look at the puzzle, they say, okay, this miner got it right. So the nodes just verify that everything's in order, and that's how it keeps going. That's truly what decentralization is. It's no third party, no banks are telling you this. This is all, just computers working together to build this decentralized ledger. And then the whole thing too, it falls with the difficulty adjustment. So how I was saying about the dice. So the cool thing about mining is, when more miners come on board, let's say there's 100 people, right, rolling the dice. Now you have 100 more come in, and we're still playing the same game to get under 10. The way the algorithm works, it's called SHA-256, is it says, okay, more people came into the game, we're gonna move the number from being 10, now you gotta roll a dice number under 5. So that's how the difficulty adjustment works. It makes it harder to get Bitcoin, and it does that because it wants to keep the transactions at a 10-minute.
The block time, yeah.
Yeah, the block time. They want to keep producing blocks on an average of 10 minutes. So it can be 30 seconds to 10 minutes to an hour. In the end, whenever you crunch all the numbers together, it's on average every 10 minutes a transaction goes through.
And the reason is because, and this is where even it gets over my head a lot of times, when you have more miners come online, more hash rate, effectively it's going to make finding the correct hash, the way he explained it, easier, right? It technically should, because there's more participants. But the beauty of Bitcoin is that it wants to keep that transaction level at the same time. Give or take, it's about 2016 blocks, I think, is every epoch. And so to keep that at around 10 minutes, if there's a lot of competition because there's more miners, difficulty has to also match that. So it keeps that block time at a certain level. When you see things like the China exodus of the hash rate, I think it happened in 2020 or 2021, difficulty dropped off a cliff because so much hash rate came off of the network. And so the beauty of Bitcoin, again, it adapts, it adjusts. And so what it did is whoever was able to keep their hash rate online had a great time, because Bitcoin rewards went up because difficulty went down. There was less participants. It didn't need to have as much of a difficulty, because getting to that point, there was less participants in mining, less hash rate online.
And the whole point of the 10-minute block time average is so the coin doesn't inflate,
Yeah, there's I think it's year 2140 is when the anticipated last coin would be mined of the 21 million. So it's again, the beauty of Bitcoin is we know the issuance. We know how much is going to be issued at every point. It's what distinguishes it from other cryptocurrencies or whatever you want to call it.
Or you can say the Fed cannot audit the Fed's numbers, but
Yeah.
that's the beauty of Bitcoin. It's such an open ledger. You can literally go and look at all the past transactions that have happened. You can see what's going on with the money, what's going on with the issuance of coins, hash rate. That's another topic, hash rate. You know, you always hear that Bitcoin and miners take up so much energy, right? So the thing about that is, it's called proof of work. So if you look at the number that these miners are trying to guess, there's like 18 zeros, and then it hits a 1 or a 2, and then so on and so on. Each zero represents proof of work. Like it took power to make that zero. Because if they mess up any of those zeros, and it's like a 1 or 2 or 3 or whatever, then that's scratched. All right, start over, you did it wrong. So essentially what the coin is, the coin's backed by energy. You know, a lot of people ask, well, what's Bitcoin backed by? It's backed by power. That's what takes so much. We can look around right now. You know, this building, you got all the lights, you got the AC going, you know, pumping your gas, charging your phone. Energy's everywhere. Energy is money now. Like the ESG narrative and all that starts to come onto Bitcoin mining. They're starting to attack it more because they're saying how much it wastes. When in reality, like, just drilling oil out of the ground, I know they waste like 67% of the power, of the methane gas in there. So it's like just wasted energy in general. And they either burn it, or they, it's called...
They flare it, yeah.
They flare it, or they seep it. It's something like seeping, where they just like let it air out into the ozone. That's not good either. But with Bitcoin mining rigs and like working with the flared gas, you're able to turn that wasted energy into a hard money, into a currency. And like the way I see it, that it hits me is if these oil companies were to understand that. So during the busy seasons when they're, you know, everybody knows oil seasons got boom and bust times, right? Sometimes they're making a lot of money, they're always away. And then the slow season comes and it's like a lot of people get laid off, a lot of people, work slows down a lot. So essentially what these oil companies could do and what they're starting to realize is like, you can, during your good times, you can power these Bitcoin machines with this flare gas you're not even using, produce Bitcoin, and then when the slow time comes, you can sell that Bitcoin and you can pay your workers. So now there's never a slow time in that oil industry.
And honestly, I think a lot of the big oil companies are starting to come around. I can't really remember specifically, but I think there's some like Shell or Exxon names that are dipping their toes into Bitcoin mining in some fashion or form. But I guess when you start talking about the energy part of it, it can get a little philosophical in the sense that this is how I think about it, I guess, personally, is you like you said, you have the narrative of, oh, it uses as much energy as the country of Finland or something like that. Like, okay, but, you know, he mentioned lights on here. We find that valuable, right? We like having light. We like having air conditioning. We like using energy for things that we find valuable. And I think we're in such an early stage that a lot of Bitcoiners will tell you that this is the most valuable thing you could be spending energy on, is a permissionless monetary system that can, you know, transfer value across borders. It sees beyond any kind of, you know, government or a regulation. Like, that is worth power. That is worth energy in my book. So I think that's where it gets different. And so you just see people saying, well, your Bitcoiners are just spending energy. Well, yes, because of this reason, right? Like, it's valuable and it should be using energy. It should be using more energy. One thing he said is about the hash rate right now, which can kind of coincide with the amount of energy it's using, but hash rate's at an all-time high right now. Like, there's, I think 320 exahash I checked yesterday is the 7-day moving average. It's at all-time highs. Bitcoin's price, we all know where that's at. It's depressed, we'll call it that. So what it says is that, well, for one, miners are not discouraged, right? They're putting money into hash rate, they're putting money into infrastructure to get miners, you know, plugged in, and they know that margins are super thin right now. So one thing I always tell people is there's always somebody smarter than you. There's a lot of people smarter than me. And a lot of people that are smart with a lot of money are still putting money into hash rate right now. So these guys are planning decades down the future, right? These are giant publicly traded companies putting in a lot of money into infrastructure and deals that are going to be going a decade or two down the road. So, and it's showing now because even though price is so suppressed, the hash rate's at an all-time high. So Bitcoin miners are not scared. Like right now, you kind of do have a bit of an advantage in terms of pricing on miners, which we can get to in a little bit, but compared to where they were during the bull market. But you know, it's a give and take too. So I know that kind of just went away from the energy talk, but it really does have a relationship to, you know, the current situation in the market. Mining economics are a whole other thing. You know, kind of how that difficulty network that Gabriel mentioned and hash rate, how they all affect how much a Bitcoin miner is earning on a daily basis. So, and yeah, energy plays hand in hand with that.
So we were talking earlier about this stuff. The last meetup, we had one of our plebs asking about non-KYC Bitcoin. So like, that's another good thing about mining. Along with securing the network, any Bitcoin that you do accumulate is KYC free. So that is another positive outlook to look at mining. Along with securing the network, you're getting free, I mean not free Bitcoin, but non-KYC Bitcoin.
Yeah, and I think one of the things I mentioned earlier is like everybody kind of comes into Bitcoin for different reasons. KYC is, and acquiring KYC free sats is one of the biggest reasons a lot of people get into mining. And a lot of plebs, a lot of retail, like I want to mine, I want to contribute to the network, but I don't want to dox myself and I want to be KYC free. You can do that, and then that's one of the things that mining does. And even with Mining Syndicate, the company I work for, like if you want to get into mining and you do not want to KYC yourself, you can. So there's ways to get around, like, I mean, there's Proton Mail that's, you know, an anonymous email. It's really all you need to buy something online, get it hosted, and, you know, a miner, I should say. Buy a miner from us, get it hosted, pay your monthly electric costs, earn your Bitcoin, and nobody knows who you really are. That's very possible. And then, like I said, so, or to Gabriel's point, people want to acquire KYC free sats, and mining is the direct way to do it. It's like dollar cost averaging by the cost of your electricity is what it is, really. So you pay your electricity and you get paid back in Bitcoin. Then you just got to acquire the asset, which is the miner first.
So the cool thing about your company is how you were saying, you know, you don't ever have to deal with the hardware,
Yeah.
because y'all handle all that. But the good thing about them is they are located in Dallas. And Will's told me before, if you ever want to see what your money is doing, you could literally go to their headquarters, shake someone's hand, go see your physical hardware and see that it's online, that it's working, so that way you're not getting BS'd. Because there have been companies back in the day where they were doing, it was called cloud mining, something similar to what Will's talking about, where they just kept your hardware, said it was somewhere like in Russia or Iowa, somewhere with cheap power. And essentially what happened was they just stole a lot of people's money. So that's the good thing about Mining Syndicate is they're giving you that service, but they have that promise where it's like, yeah, you can come by the headquarters anytime.
Yeah, it's not as, so we've expanded, the headquarters is in Dallas, and there are miners in Dallas, our operations team and our owner and most of everyone that's in the company is in Dallas. But we've expanded out of that facility, so we actually have now 4 partner facilities. It is a bit of a security risk long-term for us to just be like, hey, anybody can come by the hosting facility. So we invite people to our headquarters in Dallas to come visit and meet everyone, like he said. But your miner, if you bought one, may not be in that facility. It may be one of our partner facilities that technically you couldn't go visit because it's a security risk. But as far as our business and our company and our employees and our original hosting facility, which is in Dallas, everybody's more than welcome to come by. We do offer tours and everything like that.
So the whole energy thing too is, I mentioned about the oil fields and how they're starting to look more into flare gas mining. You know, I was watching something the other day where they were talking about if you hook up a mining rig to one of these flare gas miners, you drop emissions by like 60%.
That's the other weird thing about I think it's just so new and people don't really understand it when they throw that, oh, you're using as much energy as a country. Well, there's a lot of things that Bitcoin mining can do to lower emissions or balance the grid. Like you said, using flared gas. If you weren't using that to turn it into energy to power the miner, it's just getting flared into the ozone and causing more damage than. So you think that would play into the ESG's narrative and be like, oh, you know what, this could be kind of cool and good because it's doing this and it's lowering emissions. But no, there's always something.
And we've been flaring gas since we started mining oil. So. And the thing about Bitcoin mining is anybody can jump in and start mining from wherever. You can use renewables, you can use hydro, anything to power a Bitcoin mining rig. No, that's the definition of a true free market. We're under the impression that we live in a free market here in America, you know. But if you've ever done stocks or anything like that, you know, you wake up, what time's it open? At 8, Monday through Friday, takes a lunch break, closes at 5, takes weekends off, and holidays. So it's kind of like, you know, you have to think about, is it really a free market? But then Bitcoin, it's 24/7, 365. You can buy Bitcoin any time of day, whenever. Same thing with the mining, and that's the whole thing with all the ESG stuff coming in on top. Now you start putting regulations on this free market. Now it is censored and it is centralized, and now it's not a free market anymore. So that's the dangers of that narrative coming into this space like that. And then another thing about, you know, having these, when you start complying with that ESG stuff, you have to report like how many miners you have, how much power you're burning, all this stuff. So that in itself is another threat to Bitcoin mining, because now, you know, the government or whoever wants to impose some laws, shut down, they can go to these hosting facilities and shut them down just for using too much energy. It's like, you know.
With mining pool, I guess in relation to mining syndicate, so if you bought a miner, we allow anybody to pick the pool that they want. There's plenty of options. Good point. Yeah, so a mining pool effectively sounds what it's like. It's pooling hash rate together, because as he described at the very beginning, there's a big, like the act or the process of mining, very complex, and it's very difficult to do on a small level. Like if you have one miner and you're battling with the rest of the hash rate across the world, it's called solo mining, and it can be very profitable. If you find a block on your own miner with your own hash rate, you win the entire block. Right now it's 6.25 Bitcoin. So it's very difficult, and the odds are never in your favor. But the reason that pools exist is because it makes it more likely that you will share in the reward because your pool found the block. Right. So mining pools also act a lot differently. So for instance, we'll use a couple as an example. So Brains pool is the type of pool that, it's one of the OGs in pools. It's around the very beginning, they're Bitcoin only. So it's a really popular pool in the community. And what they do is they're on a pay per share basis, and what that means is, so say I have one miner, right, and it's 100 terahash, and it's just mining and it's going in Brains pool. We may find a block, right? We find a block, whatever my hash rate score is, my scoring rate is what it's called. At the time that the block was found, I get my portion of that block for whatever I have relative to the total hash rate in the pool. So if I have 100 terahash, the pool has 1,000,000, whatever that decimal is, 0.001, like I get that percentage of the block. Other pools do it differently. So, or I guess before I move on, that part can be very inconsistent. So, because there's luck involved in mining inherently, it means that we may find in Brains pool 1 block today, but tomorrow we find 10. And the next day we find 2. Maybe there's an average, and over the course of the long run, it is going to average out. But pools like Brains, who do on a pay per share payout schedule, can be inconsistent, and a lot of miners, especially at scale, want to see consistent payouts on a daily, weekly basis. So other pools act differently in the effect that, say I have my 100 terahash, according to the economics, which is the difficulty, the total hash rate, everything that goes into how profitable mining is, there is an expectation of what I should earn on a daily basis. So pools like Luxor will take my 100 terahash, they know exactly what I should make, As long as my miner's plugged in, I'm getting paid that, and it's very consistent payouts throughout the course of time. So you can choose, and some people want to see the consistency of it. I love Brains Pool, and I use it, and sometimes we find 2 blocks in a day, sometimes we find 10 or 11. So your payouts, we're going to look like a bar chart type, where today we did great, tomorrow maybe not so great, but over the long run, it does kind of average out. So mining pools, I guess, just to bring it back to that question, it makes finding a block a lot easier, or possible, effectively. And they pay out in different ways, which give the miner options. So some people do not really want to have any variation in the payout, so they use pools that pay on a paper, I forget what it's called, like Lecture does, to where you're able to get the same amount per day. So.
And then the whole thing about pools is essentially you're not solo mining. Now you're mining with a whole pool of people.
Yeah.
So y'all are working to get this answer, this hash. So that's what Will was saying, if it took 1 million hashes to get that answer, then whatever percent of that hash you own, you essentially get those rewards back. Other than, like, if you were doing solo mining, it's almost impossible. But there have been, like, there has been records that, 2 solo miners on small amount of hash did roll that dice to the right number, and they won the block reward. So
and there's actually pools. There's pools now where you can direct a portion of your hash rate to a solo mining pool.
Yeah.
Like, kind of, I want to throw 5% of my hash rate into this lottery ticket, essentially, that I'm going to find a block by myself. And it does happen. I think it's happened twice in recent history. Like, I think somebody had as low as 10 terahash and found a block. I forget where it was, but and then not too long ago either. So it happens. But we don't have any affiliation with any pools or any kind of deals or discounts on mining pool fees. We let the customer kind of choose their own. If you're new and you don't have a preference or know much about them, we suggest and encourage using Brains because it is really user-friendly. Again, it's only Bitcoin, so you're not overwhelmed with all these other options and coins and features from the pool. You just get a nice interface web page where you see your hash rate, you can go see your miners and the earnings, you add your Bitcoin wallet into there, and that's where you're automatically paid out. So we'll set it up, we configure the miner for you to the mining pool. All you have to do is decide which mining pool and then create an account. And then we take the information from the account that you create and on the back end configure your miner to the network. Foundry US is the biggest pool in the world, and I think it's nearing like, I should check this first. I think it's like over 35%, nearing 40%. And then there's a couple other pools that have a big portion of it. The 51% is possible, but there's probably somebody who knows more about this than I do in terms of how that could actually be. It's not as easy as like, oh, Foundry pool has 51%, so it's possible. Like, the individual actors, the individual miners have to all go into the same reasoning or do it at the same time, essentially.
There's nothing stopping them
right,
from leaving the pool. Then you're not tied to a pool for a certain length of time, right?
Yeah, no, you're not.
Gotcha.
Yeah, that's the thing about, like, how you're saying Foundry. That is a threat. Like, if miners are centralized in a big company, they could necessarily come all together and 51% attack a pool. But it's just so hard because you need, like, a lot of coordination, and there's a lot of miners in that. I'm not saying it's not possible, it's just, like, extremely hard, and you gotta be very timely on it. Because, how he said, they have 4 distribution centers. It's like, so you'd have to get all 4 distribution centers to shut down at once, or all spin it up at the same time.
One thing we've heard from the split shares, it's almost a year old. I think it was about May when we debuted. We're still in beta, considering it beta, but one thing we're hearing from a lot of customers is the want to be able to sell their shares at some point, which makes a lot of sense. Like anything you purchase, maybe you would love the ability to sell it, right? So the intention originally, obviously we're hodlers, we're Bitcoiners, we're miners, we're here for the long term. So ideally, and at the beginning, split shares was designed to be held for the life of the miner. But again, we've heard from a lot of customers that want to be able to sell their shares if they wanted to. And so it's nothing released yet, but actually, this is again over my head, but I know it requires almost essentially a rewrite of code. So the developers are working on it to be able to have a marketplace type environment where you can sell your shares. So buyers and sellers can come and exchange in a true, free market type system. So it's nothing immediate, and I don't even have like a tentative date for when it could be available, but it's something we are working on. The industry's not that old, so and when you start talking about the lifespan of these ASICs, it's hard to say. So they're a lot like other very technically and mechanically inclined items like cars or computers. They're made in mass, for one, and secondly, they can always kind of be repaired with parts. So control boards, hash boards, PSUs, plugs, everything can be replaced. So essentially, we don't know how long they're going to last. The S9s is a good example to use. It's what people ask me, how long is this going to last? I really don't know. And what you can do is use other previous models as examples. So the S9 is kind of the OG of Bitmain, and one of the first ASICs, 15 terahash miner that uses about 1,200 to 1,500 watts. And that miner, if you have good power costs, it still works. And if you take care of the miner, it doesn't get banged around, we don't know when they're gonna not be able to be fixed, or when life really just does end for it. I've seen a couple of them where our operations teams are Frankensteining together these machines to make them hash still, and it still works, but eventually they're gonna not be able to work, I think. So for split shares, the idea is for the life of the miner, when it dies, it dies. If we can fix it, warranty it in the first year, we do that, we would coordinate the whole process. And if it needs to be fixed outside of a year, we do that as well. As much limiting the amount of downtime in between it breaking and getting it back online. So yeah, our operations team take care of all that, but it's hard to say how long they're gonna last. We're kind of just, right now, and even after today's drop, I bet you some hash rate's coming offline. It depends, and it depends on the individual miner, the operator. If some people are willing to operate at loss because, like we talked about, they're KYC-free sats still. So even if you're operating at 1 or 2% loss today, they'll take it because it's not going to always be the case, and I'm still getting KYC-free sats. So not everybody's going to unplug when it's unprofitable. Yeah, so I guess we'll take a step back from there. So originally, again, you would always have to buy a full miner. Right now, the prices are much better than they were about a year ago, but that's also reflective in how much they're earning. The ROI currently is extended out a couple years at least. But to your question, one full miner, let's use an S19 XP, 141 terahash as an example. I think right now that miner is about 5,000, 5,500, somewhere around there. And that's the whole miner. But what we do is we break it down so that you can own 1% of it. So effectively, let's just use a 1-for-1, 5,000. You're going to pay one share for $50. So that's the whole goal and ethos of what we're doing, is that trying to bring the barrier to entry much lower so that everybody can get in. So you can get hashing for about $50 with one share and then experience the product that way. Yeah. So the one thing that stays fixed is your cost. So I'm paying 8 cents per kilowatt hour. You know that every month, hosting costs, electric costs is going to be about $200. Now, you may make 1 million sats in the course of that month, which is about $200 right now. So maybe you're breaking even over the course of the month. But, and again, this is where the amount you earn in terms of sats changes because of the difficulty that we mentioned. But if the price shoots up to 25,000 tomorrow, right, from 20 to 25,000, then that 1 million sats is now worth $250 instead of $200. So that's the profitability and how it can change. Your costs are always going to stay fixed, but what you profit in terms of fiat, I guess if you're looking at it in terms of dollars, is dependent on your electricity, like you said, and then the difficulty and the hash rate. So there's a bunch of cool calculators. I think me and Mark were trying to do the old formula of multiplying kilowatt hours and everything, and I don't even really understand that. I use calculators because they're great and they're quick. Brains calculator has a really cool one. ASICminervalue.com is a really cool one that I like. MinerStat is another good one. But basically, yeah, you can even select the miner, and it just inputs all the information for you, and it tells you the electric cost per day, profitability per day based on the economics. So we use, I have a few saved on my browser just for open because I'm always looking at different profitabilities, but I like MinerStat and Brains for that. And one thing I like about MinerStat is that it does tell you like what pool and how much you would earn for that miner. And so some pools are a little bit different depending on how they pay out. Some pools are not necessarily pools, like NiceHash. NiceHash is more of a marketplace. And what it does is like you can direct your hash rate to the marketplace, and then there's buyers on the other side that are gonna pay for that hash rate.
Oh, yeah.
And so you're getting paid out, like you can use non-Bitcoin miners in something like NiceHash and get paid out in Bitcoin.
Right, yeah.
So yeah, there's different ways to do that, yeah.